You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER Schwartz from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the markets? Well, let's find out together. It is time for the Option Block. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-engaging, ever-engrossing Options Insider Radio Network. Remember, if you like what you hear, do keep throwing some stars our way, whether it's on the OB feed, whether it's on the full network feed, wherever you get our content. Could be where you get our mobile app and the various app stores as well. It all helps new people discover the content. Hey, we saw a freaking record month for the options business, the busiest month in the history, going back all the way to the primordial ooze days, the busiest month in the history of the options market. So new people are trading options all the time. They need a place to turn, a place to look, a place for some great content. So if you like what you hear, do keep throwing some stars our way. Helps the people discover the content. And of course, if you want to discover even more content for yourselves, forget the other people. Think about yourself. TheOptionsInsider.com/pro is the place to go to get awesome pro Q&As. You're getting your double dose of pro Q&As this week. Why? Because we like you. Also because I'm going to OIC next week. And of course, you get Options Oddities, which is very much an unsung gem there. If you can't find something interesting, something that makes you stroke your chin and say, perhaps I should look more into that, perhaps trade it, perhaps make some moolah off of it, then you're just not doing it right. TheOptionsInsider.com/pro. Of course, live access to everything else we do. You can heckle the FlowMaster and the Rock Lobster, everybody else live during the show if the mood strikes you. Pretty much 200 archived episodes ready and waiting for you on the feed already. So there's a lot of content already the second you dive in. And of course, giveaways and a whole bunch of other fun stuff, exclusive early content. You name it, TheOptionsInsider.com/pro is the place to go to find it. As we go around the horn, see who's joining us on the old OB today. First, let's go out to the quiet, the tranquil hamlet known as St. Charles. Rumor has it I may be out there this weekend. We shall see. He is the uncleist of Mike's, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always a pleasure to be here. What could possibly bring you out to St. Charles?
Well, it's your Costco. Actually, it's Costco adjacent. There's a big collectible show over there at your fairgrounds. It happens once every 6 months or so. So it's it's like nationwide famous. I heard about it a few years ago. It's pretty fun. So go out there, see if we can score some fun tchotchkes for the studio.
Hey, and then maybe stop at Skippy's for a euro on the way out of town. You'll be in good shape.
I may end up doing just that. You never know, sir. You never know what the future holds. The future probably doesn't hold a trip to the shores of Maine, though. Luckily, we got it covered with the Rock Lobster, Mr. Andrew Giovanazzi from OptionPit.com. Mr. G, welcome back to the show. How goes not just your battles against the clam pirates, but now that pervasive menace known as the squirrel, sir?
The squirrel battle, thanks to Mr. TOSAW, is I'm as of today, I am winning. This is day 3, and I'm still winning on day 3. The squirrels, they got nothing.
Credit goes to my wife. She's the bird nerd, and that's what she uses.
She right now, she in my book, she is a genius. She is a bird genius.
To quote Andrew, he has received hours of enjoyment already from his anti-squirrel measures. So there you go, listeners. The first world problems abound here on the old OB. As we are also joined, it is Thursday, time to roll out the CBOE hot seat because we are joined once again by the FLOWMASTER himself, Mr. Henry Schwartz from CBOE. Mr. FLOWMASTER, A, welcome back to the show. And B, do you have any squirrel problems of your own?
Hi, everybody. No, but I had a white weasel situation a couple weeks ago upstate where we have a house and we have some mice. And one day when I was cleaning out a closet, this white flash went by in the corner of my eye, and it was bigger than a mouse. And I chased it into a different corner, and it turned out to be this really angry white weasel, which I could not catch, and he disappeared somewhere else into the house.
I was going to say, I think you might want to let that one go.
So, but it was interesting to think my mice problem is so bad that the predators have moved in now. So I'm just going to let nature take its course up there.
Yeah, just stay away from it for a couple of months. Let the white weasel take care of business, and then he'll move on to greener pastures, and you're good to go. Speaking of good to go, we are now good to go, listeners, right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, let's do it. Let's dive on in and see what the market is giving us today. You know, this script is starting to seem a little bit familiar. First off, we've joked for a while. We're kind of glued in this 4,100. Actually, I guess more technically like 41.5, it seems like these days. But we've been locked in this level for a while. And it seems like all week long, we've kicked off the day, and they're really trying to break it. They're really trying to crush us away from it, break us down maybe back to 4,100, maybe around the 4,130 or so level. That seems to be normally where the support kicks in and we turn around and bounce. And that's pretty much what we're seeing out there again today. They sold us down to, looks like around 41.28 this morning. And now we're in the latter phase where we're rallying right back up to 41.5 again. It's pretty much like clockwork at this point. S&P is still off about 0.2%, but it's only about 7 or 8 handles. So not a heck of a lot of red left on the screen. The Dow, same deal, off about 0.1%. NASDAQ off even less, about 0.05%. So hold your breath, wait about 10 minutes. We'll probably be green on the day before you know it, listeners. That means all of our vol friends that were looking a little bit firmer earlier in the session are now relaxing, giving up the ghost. VIX listeners, back in a 16 handle. When's the last time we had a 16 handle in the VIX? Spoiler alert, it's been a little bit, listeners. So, yeah, 1660 when we kicked off the show. That puts it down about almost 0.75 of a point, about 0.7 on the week. I'm just looking really quickly here. We got to go back a ways. So, yeah, haven't had a 16 handle in quite some time out here, listeners. 1660, again, down almost 0.75 of a point on the week. VVIX turning in the other direction. It's like someone just awoke and said, you know what? A VVIX, that's way too cheap. We need to bid this bad boy up. It's up 14 points from our show just on Monday, threatening triple digits again, 97. When's the last time we saw VIX with a 16 handle and VVIX threatening triple digits? That's a question for the ages. It's been a while since we've seen both of those conditions as well. VXX continuing its downward trajectory, listeners, 39.20 when we commenced operations here. That's down about 0.6 of a point, little over half a point there. UVXY hanging out 380 unched. Rumor is we might be getting the much anticipated reverse split. I'll leave it to the Rock Lobster to confirm or deny that. SVIX 18.75. That's up about 0.25 of a point on the week. UVIX 12.10 moving in the other direction, obviously down about 0.3 of a point. And VolQ, aka the NASDAQ vol, almost exactly a 20, a wee bit shy of it. 1990, that puts it down about 1.1 points on the week. So moral of the story, everything except SVIX is pretty much moving down out there today. Let's go the opposite of the way we started. Let's go to the CBOE hot seat first. Mr. FLOWMASTER, sir, kind of another day where they try to sell it off in the morning. At least so far now they're trying to bid it up. So the script is in full effect. What's catching your eye out there today and this week, sir?
You are exactly right. We've seen these kind of muted days, and they seem to start off with a little dip lower, and then the buyers come in, sometimes to get us right back to flat after a decent down open. The market seems really resilient, if you ask me. It's also kind of quiet, right? I think last week we mentioned that it was kind of spring break for a lot of schools, so it was quiet. And we're still seeing kind of a quiet volume, quiet activity. I think April average daily volume is well below 40 million, which is way below March, which was 45 million. So it's gotten quieter. Realized volatility is lower. I think that's why you're seeing that VIX around 16. But you're right. It's. I think a lot of people are kind of nervous about how long we might stay here, and I think that's why you see the vol jumping up. But I mean, it's interesting. We're into earnings season. There's some big names, right? We had Tesla this morning, and it's still kind of like, there's not that much action.
Whenever you join us on the show, sir, it's like you're a little just muffler on the market. You just quiet everything down here. FLOWMASTER joins us. Things are going to look quiet. We'll see. We'll gin up some action for you here on the show, listeners. Let's keep going around the horn. Let's go out to the land of the endless squirrel battles. Mr. Rock Lobster, what's cooking out there? And can you confirm or deny this rumored 10-for-1 reverse split of UVXY, sir? Can we finally get away from this stupid 3 handle?
Sadly, I cannot find confirmation. I feel
so you're just teasing me now. You're just sending me teases here. That's what you're doing?
I did. I thought I saw – this is a problem. I thought I saw something on Twitter that had some – veracity, and then no.
that was your first mistake. You saw it on Twitter and you believe it.
I know. It's like you would think I would get my head examined by now. Like, hey, it's Twitter. So I try to really discount Twitter if I can. But it's hard. You discount it, of course, but then you know what's going on. So I think there's a couple things. One is, yes, we haven't had we haven't had this level in a year or more. We haven't had sustained lower realized vol in quite a while. I mean, there was a little brief time in the summer when everybody thought, or at least the market thought, that there was, the interest rate hikes, the inflation had peaked. And then they realized, it's just not 10% a year anymore. It's it's 8, and then it's 7, and then it's 6, and then it's 5. And then who knows, because they changed the methodology of how they calculate inflation about a month or 2 months ago, which I thought was quite interesting. And even doing that, they still can't really beat it down very much. So, and I guess anyway, I think what's happening is this, just like every market cycle. I know Henry has been around for a while. You've been around. TOSAW's been around. The market eventually gets used to just kind of getting bludgeoned, and so if rates are going to go up 25 basis points a week forever, the market's going to get used to it at some point. And it's like, how much volatility does it generate anymore? So at this point, I think the Fed has already basically staunched whatever banking crisis there was by providing insto liquidity. So everybody didn't have to go out and sell their bonds and raise cash. That's as far as I could tell. And every time that happens, it's it's very successful. So the short answer to all that is, if you could draw a line from that moment in March and look now, and like vol has just fallen off a cliff. And I think we have what we have. So there's, for a very long time, and Russell just put out a, how long, and we have our VIX zones. And I was very happy because the zone of the monk is still 24 and above. So 75% of the instances of VIX are below 24, which is our danger zone. And then I believe he had 18 or 19 for the next 25. So 50% are below 18 or 19 for VIX. And so everybody just has to remember that historically, the market doesn't do a whole lot. It spends a lot of time with like 12, 13, 10, low single digit vol, in the broader indexes. Because historically, most times the Fed didn't come in and say, hey, they're just going to waste a couple $1 trillion on this or that. And that's what I think has brought, and I have to be honest, that's brought the volatility ever since the Fed in 2008 got super involved. The government got involved in banking or home loans, which I guess apparently they're trying to do again. So you get all this kind of, you get these huge moves at a high level, and it makes the market much more volatile. And generally what it is it's made the market volatile on the upside. And right now, if you're trading, like, okay, you're looking for stocks that are going to work and pay. And like companies, okay, you're back to kind of stock picking. It's not just the Fed is going to inject $1 gajillion through QE that's outside the banking system. Or, the government's going to spend all that stimmy money and all that kind of stuff again. And so it feel like that upside is not there, like crazy upside where we have those 15, 20 handle or, 150 or 200 handle SPX up moves, right? That really drove all higher. Right now, it's like, okay, we're going to live in a higher interest rate environment, which is probably going to squeeze some margins. And I think we've already been seeing that. I mean, Tesla, kind of the bellwether, their margins are getting squeezed like everybody else's. So like how hard do you rally when you have that? So I think some of that headwind is still there. And, if the Fed supported the banks and we kind of already tested the downside, like where do we go? So all of a sudden, I just think the ranges are lower. And in general, that's kind of sounds like a regular equity market to me. And that's how vol gets lower. So I don't think it's going to be a surprise to see a 14 handle in VIX by June, because not much else is going to be going on. I mean, there's always the bad news or something terrible could happen, which of course I don't want. But at this rate, 9-day vol is below 15. 10-day realized vol is 8% in SPX. How high can VIX stay when the market's moving like that? And the May future is like 19. So like how long will those numbers stay that high? It will attract somebody eventually, especially when stocks don't move. So anyway, I think that's the situation we have. And as we said on the show many times, VIX is a reflection of the math of volatility. And if the market ain't moving, it's hard for VIX to go up. And I think that's kind of what we're looking at. I think the VVIX pop is, I think, coming now from the downside, if you look. Because all of a sudden, if you look at VIX options, there's like a little bid now for all the junky stuff. Like, okay, there's a penny bid for the 14s. Haven't seen that in a while. You can buy the May 22 calls, and the May 20 are only $1.30 right now, which is, I think, about as cheap relative as they've been in a long time on a vol basis. So, I mean, I know VVIX is shot up a little bit, but I'm looking at these options and I'm seeing more of the downside picking up a little vol, and I think that's expanding VVIX a bit. But I'm anxious to hear what anybody else has to say on that one.
Not to preview vol views too much, Timo, but I did some quick back of the napkin math while you were talking, Mr. Rock Lobster. And the last time we were in this relatively unprecedented era of below 16 roughly in VIX and a triple digit also in vol VVIX, you got to go back to July 2nd of 2021. We had a 15 handle that day, 1507 we hit, so actually a little bit lower. And VVIX almost exactly the same, about a 106. So weirdly enough, that was almost an eerily similar day to today. And then, of course, vol took off, and VVIX, we know what happened, stayed elevated until last year when it finally broke the triple digit level and all sorts of fun. If you want more analysis, we'll get into all that fun tomorrow. But yeah, it's been nearly 2 years, listeners, since we've seen a 16 handle in VIX, let alone this other rarefied element we have thrown in there with vol just getting bid to high heaven. Those two things don't usually go hand in hand, but that's what we're seeing out there right now. Uncle Mike, sir, we turn to you last and indeed utmost. Make sense of all this madness for us, sir.
Well, I mean, the market's either going to go up or it's going to go down. What more do you need, right?
There we go. The show is over. Thank you.
So, I mean, looking at this, it feels to me like the market is waiting for something, but I'm not quite sure what the market's waiting on. Is the market waiting on the next Fed announcement? Is the market waiting on earnings of some company? Is the market waiting on maybe non-farm coming up in a couple of weeks now? I'm just not quite sure what will be the mover of the market. And but for the time being, it's really not moving a lot. And so you were right. You had mentioned at the beginning of the show, in that it seems like we're just kind of puttering around, and the Giovinazzi 4100 magnet might come back into play. It almost came back into play this morning, but we're really just not going anywhere right now. And so in looking at this, the highs of the year were made on, let me look here, February 2nd, when the S&P hit 4195. From there, the market went down, and then the low after that was roughly a month ago on March 13th, when we hit lows of 3808. And then the market made another run again this last month, but we couldn't quite get through or even to that 4200 level. So we're really in quite the channeling market between 3,800 and 4,200 approximately, pretty much since the last 6 months or so. And it'll be interesting to see if we are able to break one of those two levels. But for the time being, we're staying pretty tight in this. And just curious as to when we will get something to break the market out to either the upside or the downside. We have had some buyers today in the bond world. So from there, we're closer to the top end of the range than to the bottom end of the range with bonds. But we are seeing that. A couple other things that we're seeing around the market today from the standpoint of sectors. We do have somewhat of a mixed bag, but nothing too crazy or out of the ordinary from that standpoint. Consumer discretionaries are down roughly 1%. We have energy down a little over 1%. So we are getting a couple of sectors that are down a little bit more and a couple sectors that are up. But all in all, we have a 10-point down move in the S&P. So it's really nothing too exciting by any means. On the futures front, a lot of people are saying that Bitcoin is going to break 30,000. Not yet. So it's down today. It's down about 2% on the day today. We have oil below the 80 mark. So that is somewhat significant from a mental numbers standpoint. Natural gas is up roughly 1% on the day. And that's what I'm seeing. This is like a Forrest Gump market. We're waiting on the bus, but we never know when the bus is going to get here.
I thought you were going to say because life is like a box of chocolates, and the market is as well. Well, there's many different ways you could tie it in to Forrest Gump. As we keep on rolling here, listeners, let's get out to see what kind of numbers we're seeing out there. We're talking about how it's kind of a weird, kind of quiet day, but we are seeing some numbers nonetheless. Let's start in VIX land. VIX already at 580,000 contracts. That's nothing to sneeze at. Back a month and change ago, that would have been north of the ADV already, which was hanging out right around 500,000 contracts. Of course, the ADV got bid to high heaven, got up to almost 900,000 contracts. It has since come back down to earth a little bit. It's right around 742 right now, which puts it pretty much unched from where it was on Monday. So that ADV is maintaining its resilience, at least throughout this week, which makes sense. We're seeing some volume go up in these perennial down days to start and then rally. A good little whipsaw is always good for a little bit of volume in VIX. Also good for a little bit of paper in SPY. Of course, doesn't need much. A light breeze will drive a lot of paper in SPY. 4.5 million contracts right now. The ADV, 8.2 million. So definitely seems on pace to hit that. The S, 1.5 million. which is the level we've gotten used to seeing right about this time in the show. The ADV has come in a little bit. It was threatening 3 million. Now it's down to about 2.6 million. It's still a lot of paper for the S, but maybe a little bit more reasonable out there. Small caps, 580,000. That's good because they need to work a lot to hit that ADV of 1.1 million, even though that has come in. That was 1.2 million on Monday's show. That's still a hell of a lot of paper for IWM. Can they maintain that? Probably not, but at least for today, it seems like they're going to hit it. And the Qs, 2.05 million already in the Qs. The ADV is 2.85 million, so they've come in from a little bit north of 3 million as well. So the Qs seem on pace for a banger day as well. Let's get out to the single name. That's what I know where a lot of you are paying attention to that out there right now, because we are in it again, listeners. We are in the old earnings season. Luckily for you, we got some data for you. What's popping off this week, by the way? You might be wondering. Spoiler alert, everything. But before we even get there, let's get to the top 10 most actives. I got ahead of myself. I got so excited with the earnings data. Let's look at the top 10 most actives first. Let's see what's lighting it up. Cost you 204,000 contracts to break into the top 10 today. That gets you to our old friend AMC. Now a bit of a perennial offender here in the top 10. All this rumor mongering going on out there. Stock moving a wee bit as well. Is it another short squeeze? Is Amazon going to scoop them up? All this kind of stuff driving action out there. Selling off a bit today. A little bit shy of the 5 handle. 492 right now. Off about 20 cents on the day. But still good for 204,000 contracts. And the number 10 spot. Number 9. The name I used to joke about. I said, oh, what a boring day it is if Alphabet's in our top 10. These days, not so much. Coming in at number 9. 212,000 contracts. 106 and about a quarter, up about $2 today. So bucking the trend of the rest of the market. And again, AI always good for a little bit of paper. And today it's good for 212,000 contracts. Number 8, man, we've got just a 2021 meme stock resurgence in our top 10 today. We had AMC already. And now number 8, we've got Bed Bath & Beyond. 235,000 contracts. Looks like it's headed to the great beyond today. It's trading about 30 cents off 15 cents. That's not looking good for Bed Bath & Beyond. I haven't kept up with the latest on the saga. Oh, they stiffed thousands of workers on severance pay. That's never good. So yeah, all sorts of fun out there for Bed Bath & Beyond. Heading to the great beyond, it seems like, at least for right now. But we've seen this play before. We've seen it start getting down to lower levels. Back in July of last year, it hit $5, and then it rocketed back up in August to $23. So who knows what's going on with this thing? And then it hit $1.60 back in January and immediately rallied back up to $5.25 again. So we've signed the death notice of this one many times in the past. The reports of his death, at least for the time being, are greatly exaggerated, even though it ain't looking good today. Number 8, 235,000 contracts. Number 7, it's the old Netflix. 275,000 contracts. 331 and a third today, up about 8.25 today, or 2.5%. So banger day for Netflix. I guess the news that it's winding down its DVD business. Good for business at the end of the day. Number 6, the chip zone coming in right where we expect it. So all this other madness going on out there in the chip zone saying, nope, we're staying to our appointed rounds. Number 6, 277,000 contracts. That's for our old friend AMD. Up about $1.40 right now, trading right around 91 and a third out there today. Number 5, going old school. This is the Rock Lobster's old stomping grounds. This is AT&T, what the dinosaurs used to call telephone or phone, because it was too hard to say AT&T. I never got that one. Phone is longer than AT&T almost, but I digress. That's a conversation for about 20 years. 1770s where it's trading right now, off about $2 or 10.25%. So things no bueno out there. Softer than expected revenue and cash flow for AT&T. Yeah, that'll do it. That'll send you down about 10%. Good for 285,000 contracts. Number 4. Yes, I said number 4. We haven't seen this name this low in a while. It's the fruit company, Apple. 471,000 contracts. A pretty light volume as well. Hanging out right around 167.5. Kind of unched on the day, down about a dime. But we all know Apple. That's not much at all. They tried to come for it earlier. They drove it down to about 165.89. It has since rallied nearly $2 from that level. So you can't keep a good fruit company down, at least for today, even though it's down a little bit right now. But, it's going to turn green any moment and the market will be happy again. Number 3, the other half of the chip zone, coming a little bit higher than usual. It's NVIDIA, 540,000 contracts. A rare schism between the chip zone. AMD up and NVIDIA down. You don't always see that. 276.90 is where it's trading right now, off about $2.40. Good for 540,000 contracts. And the number 3 spot. Number 2, we're back off to the land of online retail with the Amazonians, 573,000 contracts. 104.44. That's a lot of fours, listeners. Up 14 cents. So tons of fours in Amazon today. And again, good for 573,000. Do you really need me to tell you what number 1 is today, listeners? Yes, you do. That's why you tuned into the show. It's Tesla. Almost 3 million contracts, 2.81 million contracts. Of course, they posted their numbers last night. And yeah, spoiler alert, not looking great. Tesla hanging out 164.12 right now, off 16.5 handles, or a little over 9%. So coming well off that recent high. Let's see, how did they get? They got up to 207.5. That was back at the end of March. So they have fallen quite a bit. Of course, as the Rock Lobster alluded to, they're coming under pressure now. They're having to slash prices all the time. That's never a good sign, even though they are moving vehicles, having to continuously slash prices to do so. More competition on the horizon. Everyone's got an EV in their offering now on the automobile side. So obviously a lot of that conspiring against Tesla out here today. 164 and change, 2.8 million contracts on the tape. On the earnings front, like we said, a banger week. Charles Schwab on Monday, Bank of America, J&J, Netflix, and United Airlines on Tuesday. Abbott Labs, NASDAQ, some car company called Tesla, IBM, I'm talking about them in ages, Alcoa, Morgan Stanley, and Discover. It was yesterday. Today we have Amex, the card, not the exchange, Rite Aid, AT&T, and Nokia. And tomorrow we have Procter & Gamble. Luckily for you, we have the updated earnings move results, earnings season, and earnings trades reports for you folks. Hot off the presses over there, theoptionsinsider.com. Let's dive in really quickly because we gotta get rolling here, listeners. We've got we'll save the upcoming stuff for another show. Let's go to the season report right now because we have a few more names reporting. A whopping 38 have reported so far, listeners. And so far, we're hanging out at a pretty robust 149%. Obviously, 100% listeners is everything moving exactly in line with its straddle. $1.50 means we're adding a little bit extra juice. Again, take that with a grain of salt. Only 38 names reporting. We have many more to come. That number is going to come in. But still intriguing stuff. Good to see the average is back to 96%. We said in our last show it had dipped to 70. I think there was just a little bit of a rounding glitch on that report. But now back up to 96% over there for you. So you can see we're still dramatically outpacing the average, but also that long-term average has been creeping up steadily season after season after getting just annihilated during the early days of the pandemic when no one gave a crap about earnings announcements and everything just got hammered from a vol perspective. These days, we're almost at 1-to-1, 96%. So intriguing stuff. No new earnings trades being entered or exited today, but we still are monitoring 75 long straddles and 49 long calendars for your earnings trading pleasure. You want to check them all out? You know where to go. TheOptionsInsider.com. Click on the Options News and Articles tab to begin your odyssey into the world of earnings volatility. Meanwhile, it's time for us to begin our unusual activity odyssey. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild. On Thursdays, it's where we also unleash the FLOWMASTer, see what's coming across his radar. Mr. Schwartz, you picked a name that's near and dear to me, not because of the shoes, I can't stand the shoes, but because CROX, in the early days, in the infancy days of the Options Insider, way back in 2007 when we first launched, we posted some unusual activity on CROX. And that's the first time we ever hit 1,000 visitors on the website. I thought, oh my God, we've made it. How could 1,000 people be visiting our web? What insane numbers. And it was all because of rubber shoes, sir. So I'll never forget that. But what did you find in the land of rubber shoes today, sir?
Well, wait, can we get some Options Insider Gibbet made?
You want to hang people?
No, those are the things you stick in the little holes that are like charms.
Oh, that's what they call them? They call them gibbets?
I believe they're called gibbets.
That's usually what you hang a corpse on, like the medieval days.
Yes, you string someone up from the gibbet.
I thought you were calling for some capital punishment here on the show today.
No, not yet. Yeah, so CROX is an interesting one. I think I've lost money in this name in the past. I don't really have fond memories of it. But I was looking at it over the last couple of days, and this stock is up from like 120 to 145 in about 2 weeks. It does have earnings coming up. And what we saw yesterday was a pretty decent buyer of the April 28th, 150, 165 call spread. They paid $380, almost 3,500 times. It was net opening. And now it was tied to a block of stock, which is the only thing that makes me slightly concerned about the motivation behind this. I mean, that's a pretty big chunk of capital, and earnings are on the 27th. So, but with the stock being up 15%, this could be somebody who owned the stock. I think it was tied to about 500,000 shares of stock. Could be somebody just saying, you know what, I want to keep some upside, but basically use kind of the defined risk of a vertical call spread to get out of enough of the stock position so that if things go the wrong way, they're not going to get smoked.
Yeah, usually I'm a little tepid on the stock legs with these, but I don't mind a stock leg in this name. Looking at this one right here, it's trading 146 and 146.70. Listen, up about $2.50 almost today. So a nice pop for rubber shoes today, up about 1.7%. On the year, different story. $76 a year ago, as the FLOWMASTER was alluding to. It's had a nice run. They took it down to the low. Looks like it was $46 back in May of last year. Remember, of course, crude oil prices were skyrocketing, inflation skyrocketing. Rubber shoes, that's a big input in their production, so that obviously hammered them early. So you went from $46 to $146 in the span of the year. So a nice run if you came in and scooped CROX on that low. So Mr. FLOWMASTER, sounds like you see the stock leg making a little bit more sense for you here as well.
Yeah. I don't think I would jump into this one, but I'll tell you, I'm not very good at technical analysis, but when you see a move like this and we're back towards 52-week highs, and the stock has just been so strong that I don't know. If I was going to do anything, I would lean long, but I don't think I'm gonna get into this.
Mr. Rock Lobster, are you down with some rubber shoes upside tempered with a little bit of stock, sir?
You know, I agree with Henry on this one. It's like, I like the idea of leaning long, but probably not, probably not going to. I did see an interesting fact that this stock outperformed, I think over the last 10 years, it's outperformed like almost every big tech stock. Like the performance of CROX is quite remarkable, actually. So, you know, for whatever reason, people still like buying their stuff. I'm actually standing on a pair of CROX as we speak. So, yeah, I think it's, I like I can see, I think that that one trade seems a little aggressive, cause it's not really a high vol mover. I guess 150 is there, but I don't know if I don't know. It's like he's saying call spread buyer, and then he thinks it's a stock seller, right? So we have a little replacement. So I can see why somebody might want to move into calls after the stock is up $100, and still have the same upside. That trade makes sense to me. But yeah, it's pricey. It's just one of those things where as far as just jumping into it, I wouldn't be quite sure, especially with earnings and stuff coming around. So that's where I would leave that there. But yeah. I can see why somebody would replace stock with calls if it was indeed like a kind of a one-to-one thing. It looks like it could have been. from what I'm just trying to look at what Henry was writing here on it. So
I think we're all down with selling the stock. I think that makes a lot of sense. Also, learn something new about the Rock Lobster. You're a rubber shoe man. I guess I could kind of assume that of you. You seem like a rubber shoe guy. I'll let you.
You know what I learned from my foot doctor? They make great orthotics for people that have like tendon injuries in their foot.
Oh.
They're very they work very well for kind of recovering from that injury.
There you go. You have all sorts of ailments over there, sir.
Yes. It is. It actually is kind of a common like tendon injury in your foot, I guess, for old people like me. And my foot doctor is very good. He was right. I just put on some Crocs, and 6 months later, it all went away. So there you go.
Look at that. The magical healing power of Crocs. You heard it here first, listeners. On the show, maybe, Mr. Rock Lobster, you need the services of our next name here, the FLOWMASTER's next victim. Also, one of the worst named companies we've talked about, Hims and Hers Health Inc. Ticker symbol HIMS. Mr. FLOWMASTER, what'd you find in this horribly named company, sir?
Well, if you take the subway in New York, you'll know this one because they have a lot of billboards down in the subway in New York. I don't know about Chicago.
I have heard ads for Hims on like podcasts and stuff. I didn't know it was Hims and Hers, though. The two just don't go together.
They might have added in the and hers to try to be inclusive at some point. But yeah, this is a company that I believe is effectively telehealth, and I'll bet you more than half their business is mail order Viagra or something along those lines. It's a personal products company. And that's all I know about it. I don't have any deeper knowledge. But I did see the call volume pick up this week, especially on Monday. And when we saw the stock was around 970-ish, 980. And some May 12 call buyers came in, paid 35 cents for about 5,000 or 6,000 in a couple of sweeps. And that basically kept up the next day. They moved, stock went up about $1 that day. Then they started buying the 11 calls the next day. So we've basically seen 3 days in a row of unusually heavy call volume. And this is one, I don't know. It does kind of feel to me like something that might have something behind it. Interestingly, the 11 calls, about 5,000 or 6,000 were bought, but I was able to use Trade Alert and this customer, the open close customer data that's in the system to see that although it was all customer buying the first day, the second day was much more, looked like more like scalping, where people were buying the 11s, but they were also selling out of them. And the stock went up another $1. So basically, you get the stock up from 970 to almost 1140 in a couple days. It's held up. So even though it kind of felt like maybe the 11th strike was just scalpers, the stock is really still very strong. So it's this one, it's an $11 stock. It seems like something that could kind of catch fire if the kind of the meme stock traders that are still out there started to take a close look at it. We still see, even though it's not, nothing like it was in 2020 and 2021, we still see some small stocks, where people are basically, low dollar stocks basically, where people are kind of looking for short squeeze dynamics or looking for enough attention on directional heavy call buying to kind of get the stock to take a run. I mean, that was even in Tupperware. That was kind of what we saw last week when you guys were making fun of me. So Hims and Hers, this one I might consider a trade. Also, I need to make sure that I mention nothing I say as a recommendation. I think I heard from some internal CBOE people that they want to put a little disclaimer on the podcast. So do your homework. Nothing I'm saying is a recommendation. I'm just highlighting some interesting action.
Nothing indeed, sir. But you're right. This Hims had quite a nice pop just over the last 5 days, up nearly 12%, about $1.20. You go back a year, listeners, it was trading about $5 a year ago, but then they crushed it down to $2.72 in May of last year. Now trading about 11 and a quarter. So quite the year, up over 130% just since a year ago. If you go down to that low, it's up even more, closer to 140 odd percent. So this is quite the year here for Hims and Hers Health. Before we get out of here on the odd block, if you have any thoughts on that, Mr. Rocklop, so you can hit them. Also, I wanted to hit on these really quickly as well. This is an old offender making its name back again. This is Pool Corp. Ticker symbol, appropriately enough, Pool, Pool. They make patio, pool supplies, all that kind of stuff, listeners. trading 338.71, up about 4 cents today. It's not a big banger day today. On the year, a bit of a different story. It was trading 431 a year ago, so obviously it's off about 21% on the year. They actually crushed it lower. They got down to 278 back in October of last year. So from that 278 level, it's actually up about 50 handles. But net on the year, still off about 21%, or about 93 handles from where it was a year ago. But looks like someone, Mr. Rock Lobster, is fading this name, coming in today, scooping up 5,000 of the May 300 puts, paying $5.90. Obviously a pretty wide market, but then again, it is Pool Corp after all. It's not Apple. This is a 45 vol. This is post earnings. They just had earnings here, so looks like some folks fading Pool post earnings again. They bought these puts when the stock was 327. So that's going to leave a bit of a mark. Speaking of leaving a mark, Mr. Rock Lobster, his name may sound familiar to you. It's because we talked about it not too long ago, back at the end of January 30th. We talked about someone doing the exact same thing, coming in and scooping up what we termed at the time some pretty meaty puts in Pool Corp. They bought 7,000 of the April 300 puts, so the same strike even, similar size. They paid $6, so almost the exact same price as well. So if it looks like a duck and it quacks like a duck, listeners, it was a 48 vol. It was opening. The stock was 376.58 at the time, so these were much farther out of the money, had longer to go, obviously. And they were still fading through the earnings. The earnings are on February 16th. I checked before the show time. Those April 300 puts still open and obviously not looking good. That's out. So you're talking they've dumped $4.2 million on those puts already. Obviously, they probably have some stock, so they're probably net happy at the end of the day. But still, Mr. Rock Lobster, looks like the same customer coming back to play after dropping $4.2 million already on some par puts, saying, let's go buy another month for another $6, sir. What do you say? Fade in Pool Corp yet again.
Well, especially with this one, this was like, I was trying to think, because this was quite an expensive stock.
Yeah.
At like a $500 stock. And, this is one where maybe this whole pool business is a little inflation, not, I would say inflation sensitive, but, like recession sensitive. I mean, it makes money. They pay a dividend. It's not like it's a nothing corporation, but I think they're just kind of suffering from a little bit of earnings decline on this one. So, and this would, I figured like this would be a product where it might be interest rates going up are not helping them. So it does appear that this could be a purchaser. Of course, it's one of our favorite markets. That's the $3.20 wide market.
Yeah, that was a nice one. Oh, if you could have made those back in the day.
Yes. We would be all sitting on islands.
How are you on these puts? I'm 270 at $6. What do you want to do?
What do you want to do? I can just remember some of the brokers. Even if you gave them a market that was like a $0.50 wide, they'd still look at you like, really?
270 at $6. That's some good times right there.
Yes, a guy like Brophy going, come on. $0.50 wide. That's a joke. Some of the voices on these floor brokers are quite fantastic.
They lived very healthy lifestyles. I'm not sure if you knew that.
Yes. Yes, he would pretty much just shake his head at you. You got to do better than that. So yes, I don't even know what he would do at a $3.20 wide market. If he's still with us, he would probably be rolling his eyes. Yeah, but I think that, again, they're buying puts, and I don't know if it doesn't appear to be tied to stock, I guess. So, I think this is another, like they're kind of in like that tough earnings spiral until interest rates stop going up, where it's affecting their business a little bit.
All right, and know it's affecting our show, listeners. It's your mail, so let's get to it right now.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, let's get down to brass tacks here. Our question of the week, hot and heavy right now. Getting your pulse, getting the lay of the land on our listeners a bit again. We'd like to do this every now and then. Right now, we're asking you quite simply, which option strategies are you using the most frequently in your portfolio right now? And again, it's only 4 categories we can pick in Twitter, listeners, so we can't list everything under the sun. So if you don't see your favorite, you know what to do. Hit us up. If it's interesting, we'll talk about it here on the show. Our 4 categories for this week are short put or covered call, long call or long put, vertical, diagonal, or time spread, or butterfly/wing spreads. Let's start with the uncleist of Mikes, our resident permabull. Mr. Uncle Mike, sir, I have a feeling I know what you're going to say, but what are you feeling in this poll? And then what do you think our audience is feeling, sir?
Well, I mean, you don't have the box spread or conversions or reversals in there.
That's
so
true. We left out the sexiest trades of all.
You don't have those. So I'm going to go with like the covered call, short puts, and I'll say the same for myself.
Interesting. Mr. Flowmaster, same question for you. What is your choice and what do you think our audience is choosing? And then also we have a separate question for you coming in here from AJCC. He or she wants to know, how much is it for the trade alert? And they put, and the Eye of Sauron. So they want that as a package deal, sir. So your poll answers, and then the Eye of Sauron for AJCC, sir.
Sure. So I would go for vertical credit spread. That would be my choice. Poll. And trade alert is $350 a month. But I encourage people to request a free trial, make sure it's actually going to help them trade and make some money. And then they can make their decision. And the Eye of Sauron comes free with the subscription.
I was going to say, you don't have to pay extra for the Eye of Sauron. It's in there. It's included in the bundle there, listeners. So you too can enjoy the endless gift that is the Eye of Sauron, staring at you day after day, night after night, judging you over there. The Eye of Sauron. All right, Mr. Rock Lobster, take us home, sir. What is your vote on the poll, and what do you think our audience is voting for?
I think the audience is doing short put or cover call. I'm actually, it's kind of a toss-up between the long call and butterfly trade. So for me personally, but I do some call riding in the.
You buying a lot of straight up calls these days? Just loading up on calls?
Well, to me, it's a toss up between the two, because sometimes it's, the options are cheap and I'm doing long options. Other times it's kind of flies and spreads. So my biggest problem is I'm a more conditional guy. I'm not just, all this or all that. But I would have to say, it's because I trade a lot of VIX and SPY in a combination. So I guess if I'm going to go that way, I would have to go vertical, diagonal, time spread for myself. Because that would probably be the most common, because I'm almost always doing some kind of vertical.
You said short put covered call for the audience. Well, that is a winner chicken dinner. That is what's taking it for the audience right now. Short puts and covered call, 33.8% right now. Followed, it's a hot battle. It's contentious by long call or long put, 32.3%. A vertical, diagonal, or time spread, 21.5%. And my personal use case right now, what I find myself doing the most, butterflies and wing spreads, bringing up the rear, no love, only 12.3%. You got about a day left, listeners. So if you're listening on the podcast, you will have time to vote. At Options is the place to go as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners. That music means we're coming up against it, so we're going to do a combo of Around the Block, as well as what you are watching what you have to share with our listeners that may intrigue them until your next appearance. Let's start with you, Mr. Flowmaster. What are you keeping an eye on out there in the markets right now? And if folks like, AJCC, want to kick the tires on the Eye of Sauron for themselves, where should they go? What should they do?
So just swing on over to tradealert.com, and you'll end up on a CBOE page. And at the bottom of that page is a form. You can contact us, request a trial, tell them you heard us on the Options Insider. We will take care of you. One thing that I was looking at, we didn't even go into it today. We didn't have time, but today's April 20th, which is 420, which for the potheads out there is a thing. And I decided to pull up a basket of cannabis names and see how they looked versus a year ago. And almost all of them are down about 85%. So rough year for the sector. But I'll actually, Mark, I will see you out at OIC in Nashville next week. So I've been quickly working on updating some slides showing the record volume and kind of what traders are up to. And we continue to do a lot of focused work on the 0-day, the short-term trading, and kind of what that flow looks like, and modeling it. And to me, it's one of the most interesting things that's happened in our industry in years and years is the new use cases and the new styles that we're seeing in the 0-day trading. A lot of it's in SPX and the mini SPX, which is XSP, but it's also in SPY and NASDAQ and other products.
There you go. Check it out, tradealert.com. I'll see you in person next week, Mr. FlowMaster. So that is always exciting. Going to do an in-person option block next week. So that should always be fun from our new Southern studio there in Nashville next week. Mr. Uncle Mike, same question for you. What are you keeping an eye on, sir? And where should folks go if they want to learn more? And if you want to come down to Nashville too, you are always welcome, sir.
Always love going to Nashville. First off, I'll give my take on the pot stocks right now. Same as it always is. I think they're high right now. With that being said, if you are looking for a financial advisor who actually looks at the option product, but also is versed in things that pretty much any other financial advisor is, financial planning and things like that, feel free to reach out to me, stcharleswealth.com. You can book a phone call appointment on my website. And in terms of what I'm watching, I'm just continuing to wait for the bus that we don't know where the bus is going to take us with the market right now.
And Mr. Rock Lobster, you get to take us home, sir. What are you keeping an eye on until our next episode on Monday? And where should folks go if they want more pit in their lives?
Yeah, I'm just corporate earnings. The banks, a month ago, we all thought it was going to be Armageddon, and the bank earnings don't look terrible, I have to be honest. So a lot of those stocks, see if they can continue their kind of march back up. And then as far as, optionpit.com, 888-TRADE-01. Mark is doing the webinar today on trading the VIX in what could be a much lower market. So that is at, I believe, 8 o'clock tonight. So you want to stay tuned or jump on over to Option Pit for that. And also check out my goodies and products at Money Map Press and at Option Pit. If you want to learn how to trade, how all these products work, if you want to try to figure all this stuff out yourself, knock yourself out, or you could have somebody that's been doing it for 30 years help you out. So up to you, but give it a whirl.
There you go. Optionpit.com is the place to go. We got to get on out of here, but don't worry, listeners. I'll be back in a little bit with This Week in Futures Options. Our guest will be Jim Romer. He's a meteorologist and owner of Best Weather Inc. Got a feeling we're going to be talking a little bit of ags, but we shall see. Stay tuned for that. If you're listening live, I'll be back in a little bit with that live in your ear holes. If you're listening on demand, just hit next on your podcast device of choice. FIFO should be hanging out there. Back again tomorrow, noon Central, 1 p.m. Eastern for Vol Views. After that, for all you pro cats with options oddities. And you get a double dose tomorrow. You also get another pro Q&A because I will be traveling down to Nashville next week. You get another pro Q&A. Oh, so that would be a great one as well, hanging out in the crypto realm tomorrow. So if you want to see what the pro is all about, theoptionsinsider.com/pro is the place to go. Otherwise, we'll see you back here on Monday, another episode of The Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.